Hello, investors. It's been a good month for your portfolio. Portfolio has been up more than 3% this month. The market has been flat. Due to the second wave in COVID, there has been widespread human pain and tragedy that's happening in the country. And that is somehow being reflected in the markets. We, for one, were expecting that this whole problem with COVID would be elongated. Going back a year ago, we had shared some models with you. And one of the models that stuck to us was the Spanish flu, which happened in the early 1900s. In the Spanish flu, we had seen that when you have human problem of this magnitude, it's always the second and third waves which are more lethal. In India, it's more so because of our demographics. It's not just about finding a vaccine, it's not just about having medication, but it's about covering so many people. Until we do not cover such a large number of people through vaccine or supporting healthcare services, we will not be out of the woods. We are going through a second wave, we will go through a third wave. And that for us was our understanding when we studied models of past pandemics as they had played out. So, as I said, that we had positioned our portfolio defensively. It did well when the markets fell because we fell less. However, around the mid of last year, mid of 20, the markets thought that this problem is over with the discovery of the vaccine and we are going to have a V-shaped recovery. Things are going to be hunky-dory. Well, that may be true in some countries, but in India, we continue to feel that this is going to be not a V-shape, but more U-shaped. We will take time to come out of this. We do not have the necessary infrastructure to cover so many people so soon. And that thought process was reflected in the way we were positioned in your portfolio. If you see your portfolio, you will see that our big overweight positions are the red bars. So the biggest overweight position we have is in specialty chemicals. We are up at around 23% versus a benchmark of 1.5%. So what we have done is we have navigated your portfolio to those sectors which are not likely to be adversely affected due to this elongated fight that we are going to have with COVID. We are 22% overweight in chemicals vis-a-vis the index. And this requires an element of conviction, which is something very central to our investment philosophy. You can see it here. The next sector we are overweight is pharma. Again, pharma struggled for about 6 months when the hope trade was on. However, you'll see that in this phase, again, pharma stocks have started making new highs, and that is getting reflected with your outperformance in your portfolio. The third sector, which we find very interesting, is retailing. This has not just, COVID has not just brought about a change in habit, but the digitization of consumption is very, very visible. So in this area, we find that those pockets where retailing is getting digitized is a very good opportunity. We are already overweight in this space. And I think going ahead, we are doing a lot of research in this area, and you will find that we will further add to this space. And we think that this is the theme that is going to play out in the next 3 to 5 years. And one doesn't have to go far, but look into each household. I mean, the amount of Amazon boxes that come to your place or your neighbor's house is just an expression of how retailing is moving to the digital space. And that is where we are very focused. We are doing a lot of research. And this is going to be an area where the weightages are going to go up. Obviously, we are overweight some sectors. There are some sectors that are going to struggle. One area which is a big underweight for us is banking. Compared to the benchmark, we are almost 5% lower. It is true that banking is the backbone of every economy. And if we have an economic revival, banking will revive. But we feel that banks as a stocks are not going to move as they did in 2018 to 2020. They are going to be selective, and it is not going to be a big thematic move. So that is why we are underweight banks. The other area we are also underweight is consumer durables. We feel that Consumer non-durables are going to get struggled, where incomes are shrinking, where there are general human tragedy. We feel that this area is going to take some time to recover. The third area we are underweight is finance. Again, it is very linked to banking. As I said, we do understand it's a backbone of the economy, but it is one thing to be part of the economy and the other is for a stock to do well. So, what you will see is that we have had challenges, but we have held firm in our conviction that this fight against COVID is not going to end very soon. And your economy is not going to see a V shaped recovery. The recovery, as I said, is going to be more U shaped. And that is why it is very important to be a little defensively poised and be in sectors and themes which could be beneficiaries of this change or this major reset that has happened in our lives. So I leave you with the thoughts that one thing that we were very focused on since a year is a little defensively poised portfolio. We had outperformance when the markets fell. We underperformed when the markets went up vertically because the markets went on into complete optimism and a full risk on trade. But I think reality is coming back. And that is when you will notice that our portfolio has started doing well. We feel that this fight against COVID, as I said, is going to be elongated. And from your portfolio, we feel this is the optimum positioning. And in these phases of uncertainty, if we've had some underperformance in the past, we will do a good catch up. I leave you with that. I just want to share with you that we know a lot of people, friends, family, neighbors who have been affected. Stay safe. Just pray for you, your family, and everybody's welfare. Thank you very much.